I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And the big problem is deliveries. How do you reverse the trend?
Hi, Team Value. JJ here. Welcome back. Well, today is Tesla production and delivery numbers. I'm going to react to a few clips, give my opinion on the news and what they're saying. And is it a buy the dip moment, a buy the dip quarter, a buy the dip half year, a buy the dip multi-year stretch it's been so far? Let's get into it. Okay, first, just a quick catch up on the price action. We see here it ended the day after the results 4.9% down. During the day, it was a lot more than that. And we can see for the year to date, it's down 32.9% so far. And over the past year, down 9.8%. If we go back 3 years, it's down 24.9%, 25% over 3 years. And we can see the peak there was November 2021 at over $400. So it's been a slide since then. I did buy the shares within that time. I'm not a Tesla shareholder at the moment. I bought at 125 during the dip, and then I sold about 100% after that. Margins were slipping. I couldn't see good news ahead, and it hasn't been so far. But is this a buy the dip moment? Are we seeing the bottom here now? Is it going to get better from here? Let's check out some clips and I'll react to them.
Phil, take it away. Give us those Tesla numbers.
These are not good, David. That's why the stock is down. Deliveries in the first quarter of 387,000 vehicles. Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp-up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin. Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again,
I think China is a factor. We'll talk about that. There's definitely heavy competition in China, especially with BYD, but others as well, which American investors don't often think about too much, but it's a huge factor. And there seem to be some excuses here from Tesla. And another thing, the FSD, Elon in the last week or two has been talking up the new FSD, which does appear to be very good. But, you know, was it masking this news that was about to come out? He absolutely knew what news was coming out.
387,000 vehicles delivered in the first quarter. The street was expecting 457. Even some of the bearish analysts were expecting, 410, 415? Not 387.
I was going to say, Phil, full year estimates, I guess we can say goodbye to some two handles, right?
Oh, I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were going to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that?
It is early days yet for the rest of the year, but it's not looking great so far. You know, in the macro environment, Elon did warn about this, you know, many things on the last earnings call. So this earnings call coming up is going to be very interesting. There's not a lot great to see. Not a lot of optimism apart from the other bets. We could say the other bets that are going on, but it's going to be a while, I think, apart from that FSD that suddenly gets to a point where it's drivable and the regulators allow it and there's robo-taxis, but it's going to take a while. Whatever they say, it's going to take a while for it to show up in the numbers, and that is what analysts and investors care about. Now, if you're getting value out of this Tesla episode so far, I'd appreciate it if you hit that like button wherever you see one to help the algorithms to spread it to more people. Thanks.
Possibility is out there, but it's early and a lot of things can change. Obviously, production is likely to come back much stronger and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter. And if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact. There's no doubt that that's having an impact on Tesla. And remember, Shanghai is not just where they supply China, but that's also where they supply other markets around the world. So they can offset some of the impact of just pure China and the competition there in terms of vehicles being shipped to other markets out of the gigafactory in Shanghai. But there's no doubt that this competition in China has had an impact.
Yes, competition in China. And of course, BYD is bringing out much cheaper cars. There are other companies with cheaper cars than Tesla. Elon said that they've kind of tapped out the market for where they are now, but they went ahead with the Cybertruck, ramping up the Cybertruck. Should they have done a mass market cheaper car? I think that they should have. I think that if they'd been rolling that out now so they could compete, but it's going to be a while. It's going to be a long while before that happens, ramping up the Cybertruck. But is that going to be massive numbers, massive profits, to make up for the shortfall here with this really intense competition in China? And of course, BYD is going global, is trying to expand and export globally. Their cheaper cars, there'll probably be tariffs. Elon Musk has said that they, these Chinese car makers will be incredibly competitive, and he wants tariffs on them. If they sell in Europe, in the US. And it's kind of ironic that Tesla cars sell a lot in China, but BYD cars, for instance, Chinese cars, aren't really selling in the US yet, and there'll probably be tariffs. We had Japanese cars in previous decades that are global. There's so many around. Could this happen with Chinese cars? They're obviously good cars. BYDs are good cars. Some Tesla shareholders say that it's not good technical cars, but from what I've seen, it seems pretty good. For the money, it seems pretty good. So yes, intensifying competition coming from China.
Now, Phil, I know that the United States is not at the fulcrum. It is China, and I know the problems in Berlin, but there's this kind of this newfound, we don't want to go electric. We want ICE. We also are willing to have hybrid. In this country, it has reached
Americans are embracing hybrids right now.
Toyota's numbers came out, and they're selling a lot of hybrids.
The company reports obviously April 23rd, so we'll get a lot more details then in terms of price cuts, what actually meant to underlying cash flows. You were in Chile not that long ago. You mentioned the production out of the Shanghai factory, but give us a sense in terms of your expectations in competition in other markets where the Chinese can come in with vehicles that are still priced far below what Tesla's able to do.
Yes, I mean, I'm in New Zealand here, and Australia, I understand, has BYD cars. I've seen them on the roads a lot here. BYD cars there are a lot of Teslas too, of course, but definitely BYD coming in here. The US is a different story, but in other places, there's definitely room for imports that are cheaper than Tesla cars.
Not only are they priced below what Tesla is able to do in electric vehicles for the most part, because of the advantages that they have in terms of scale, in terms of labor costs in China. But on top of that, David, when you go to a place like Chile, the thing that you notice is that the internal combustion engine vehicles, $4,000, $5,000, $6,000 cheaper from a Chinese automaker compared to a comparable vehicle. We compared one from Great Wall versus a Toyota. They were both mid-size SUVs. No comparison at all. And when we talked with consumers, they all said the same thing. It's pretty good. Why wouldn't I buy it? It's $5,000 cheaper. And that's the competition that not just Tesla, but all automakers are facing. And in terms of EVs, yes, Tesla is king of the hill in the United States and was king of the hill up until the fourth quarter with BYD. Full year numbers, I think BYD probably passes them this year. They're still very formidable, and they've got a lot of advantages. But they are facing a period here where they've got to deal with softness in a number of key markets.
It's mainly the price point, I think, rather than any other of the concerns. If there was going to be a whole new lot of people buying EVs, and they are, I mean, it's definitely growing. It's just hitting that ceiling of what people can afford, especially with interest rates higher. So, there's definitely competition there for Tesla. They should be doing a mass market model, I think.
Our next guest says, it wasn't a good quarter. I want to get to Dan Ives and everything he's got to say. Of course, longtime bull on the stock from Wedbush Securities, Managing Director of Equity Research. Dan, I'm reading your report, which you wrote very quickly. Let's call it as it is. While we were anticipating a bad quarter, this was an unmitigated disaster. First quarter deliveries was a nightmare quarter for Tesla, you wrote. Elon is now pressured by the street, and China demand remains very soft. And you also say, in this case, street criticism is warranted. But then I end, and you still have an outperform rating, and I wonder why.
Hey, look, I mean, for the long term, like in terms of the actual opportunity for EV, for full self-driving, for autonomous, that's still there. But let's just call it like it is. This is no smoke and mirror. I mean, if you looked up train wreck in the dictionary, you'd see a picture of Tesla's 1Q quarter. And, I think
he's got away with words there, and that's why they have him on. He's entertaining.
The big problem is deliveries. How do you reverse the trend? And that's why I believe this is a fork in the road. In other words, Musk either turns this around, whether it's cutting prices, put the strategy in place. But Dave, I think we sit here maybe 3-4 quarters from now, and this was actually a seminal moment and the start of what could be some darker days ahead if they do not turn this around.
All right.
Cutting prices more. I mean, it's hard to see how they do that. Or if they had to do that to sell the volume, it hasn't really worked. That's what Elon said, that they were cutting prices in order to sell everything they produce. And it's not working. It's obviously not working. So do they cut prices more and margins go down and down? Or do they not? Do they just produce less and try and put margins up? It's going to be interesting to see because they can't just roll out quickly this cheaper car model. They don't have one yet. They can't do that. It's not looking great for the next quarter or two or even more than that.
What does the turnaround look like? You say cutting prices. Clearly, they're facing more competition from Chinese EV makers, not just in the domestic Chinese market. So what do you do if you're Tesla?
I think you have to weigh out the strategy. Okay, what are price cuts going to look like? When are the new models coming? What could software be as a percent of revenue? What's the AI roadmap? Right now, it's essentially playing darts blindfolded. You don't really have an adult in the room. The conference calls, as we've talked about here, have really been horror shows. So investors, they're hoping in terms of that, what's on the other side of this. Now, in terms of the growth, the opportunity, $30 billion in cash, they're in a phenomenal position from that perspective. But I'd say probably this is what I'd say in the last 5 years, probably the darkest period relative to what we're seeing in China. And this quarter, explanation mark.
Well, we talked about FSD, their software margins. I mean, how close is that? Now we can see why that Elon Musk was talking up FSD, the new version. It does seem very good, to make people think that it's coming, that software margins are here, that they can roll that out and sell a lot. But really, I don't think that it's that close here. And as I said, Elon would know that these numbers were coming out, talking up FSD, and a lot of the followers of Elon Musk were very influenced. He's a huge influencer on X. Is FSD nearly here? Will it save it? Will there be software margins to save the company? But it's still not looking like it's that close to me. We'll have to see.
The hope of investors, you still clearly have hope as well. So what do you base your hope on? You've been, the last 2 minutes here, you've been quite negative.
Mm-hmm. It's that we're 3-4% of automobiles are EVs. Is that full self-driving autonomous? You could argue that could be $1 trillion worth of value from a software perspective. The China story, you've seen the price cuts start to stabilize. They had a good week over the last quarter. So there are some optimism, and I still believe that you could be toward 2 million units for the year. But this quarter, there's just no way to sort of glass half full it. This is one where even whisper numbers call it 415K. 386, a disaster.
So is it supply or demand? Because we expected some production setbacks in the first quarter.
Okay, I think supply would be dog ate to homework. Maybe call it 30K. You could explain that in a press release. But realistically, it's demand.
Supply seemed fine. The numbers seem fine for production. It is their deliveries, and they had excuses for that. But really, it does seem like a demand issue at the price point that they've got.
And the problem here, Sarah, is that you're either going to cut prices or ultimately you're going to hold serve and then focus on what you could actually do but hold margins and where volumes could go. The problem is that you can't just put one toe in the water.
All right, Bryn. Dan Ives was pretty explicit today. I know he's still a longer-term bull on the stock. He called it a train wreck, among other things. How would you assess this?
Well, yeah, they sell expensive products. And I think even the bearish of estimates weren't thinking they were going to come out at, 387,000 vehicles. Listen, the way I look at it is this. In 2020, when they started the Gigafactory in Shanghai, that was a watershed moment. They were able to autonomously manufacture in the biggest EV market in the world, and that has helped grow their earnings and revenues and cash flow the last 4 years. What's happened, though? The Chinese competitors have copied them and have caught up. And so now it's somewhat...
I don't even think they were copying them. BYD, it wasn't looked at. BYD did some things before Tesla, including the batteries. Their battery packs have been second to none. Their technology's been good. I don't think they were copying them. I think that they were neck and neck all the way. It just took a while to ramp up. And now it's intense competition in China.
Not existential, but it's how are they going to compete now in this very competitive market? And so I think that there's nothing to be excited about over the next 2 quarters because this company is way too big as a market cap and way too mature for new investors or existing investors to add to the position when we know their earnings come out from April 17th. I think they're going to have a bad Q2. And so we're just going to have to settle in here. But there's nothing to get excited about right now. And I think this is a good reminder, don't fall in love with stocks because they'll break your heart.
Don't fall in love with stocks because they'll break your heart. But of course, back in 2021, late 2020, Tesla could do no wrong. People were buying at any price. It was over 400. A lot of people were way down on Tesla because they bought too expensively and it slipped down. Will this be a multi-year, 5-year more slip? Like if we look back at Amazon, companies like that after the dot-com bubble, and I think there was an EV bubble. I said that throughout from late 2020, and it has been sliding down. And as you said, there's nothing to really get excited about for the next 2 quarters. This earnings coming up. Will the stock slide when the numbers actually come out, or will there be expectations of that? And so they'll be better, but it's hard to see how this will be a good quarter. And as he said, 2 quarters after that, is it going to get any better? So is this a buy the dip moment? Let's see what else he's got to say, and I'll talk about that in a minute.
More if the stock continues to slide? I said it's having a terrible start to the year. It's down more than 30%.
You know, I like to sell calls. So half my position got called away at 220, which was, it went much higher than that. So that's my discipline. I'm going to see if it settles in here at 160. What I think I'm going to do is wait until after earnings, let the analysts bring their numbers down. But really, I want to see an innovation catalyst. And I have a Tesla. I use the full self-driving, but 95% self-driving and 100%, you can drive a truck through that. So I think it's going to be a rough year for Tesla. So I would wait probably a couple quarters before I look to add to the position.
Interesting what you said about innovation there. There are innovations to come in Tesla. I've even made a video about humanoid robots. There are a number of companies, a lot of investment from, big players, not just in Tesla, but, other companies as well, smaller startups. But Tesla's got the brand, the profile. But really, as I said, 2027, I could see not happening till then. And FSD, Elon's been talking it up. But in terms of innovation that could actually drive revenue, it does seem some time off. She said 2 quarters, the price coming down more. How low could it go this time? Now, what do I think in terms of it? I'm not buying the dip here. As I said, I've been out of it since I bought it at 125 and sold 100% later. So it was kind of a momentum play, really. I could say value, but it wasn't at value prices, but did get 100% out of it. And I did see this kind of thing coming, and it could persist. I think it's just my opinion, but I really can't see many catalysts. There's the battery stationary energy sector, which has been going very well, but this quarter's probably going to be rough. The earnings that come out, and this is some surprise in there that we don't know about, but it could go on for a while. And I could see Tesla sliding for quite some time yet. It's been since late 2021. How long could it go for? That's the question. Buy the dip. It's up to you. I'm not doing that. Anyway, I'm more interested in small and medium cap stocks. If you look at my last video, I talked about the portfolio that I had. That's up 30% this year for the portfolio. So I'm happy not to be in Tesla at this point. And if it goes really low, then I'll think about it. As I said, I'm not really into mega cap stocks like this these days, but I will see if it goes really low, then I would think about it for the long term, but not at the moment, and we'll see what happens in the coming quarter after earnings and after that. So I'll get back to you on that. So what do you think about this? Let me know in the comments. Do you think this is a buy the dip moment, a buy the dip quarter, or the rest of the year? What's going to happen from here? Do let me know. I know a lot of people have got an opinion on it. Now, if you're watching this episode on YouTube, I'm going to put a video here of what YouTube thinks that you in particular should watch next based on your history and so forth. So go and watch that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.